Hi everyone, and welcome to the Power Sector Review, where we take our power universe, break it down into sectors and subsectors, and take a look at what's working, what's moving, and what's changing. So let's dig right in, because tonight we have a ton to cover. I'm going to break it into a lot of sectors, subsectors. We're going to look at ETFs, and we're even going to look at some stocks in each one of the sectors that we cover. And we're going to focus tonight on what is working, not what is not. I'm going to leave what's not working for those who really want to do a lot of shorting. But right now, there still are places in the markets that you can find good opportunities, even in some of the sectors that have already been hot for a while. So let's jump right in, take a look. We're going to start with our power universe, which is basically, as I was saying, the universe is still in a downtrend. If you watched our macro review, you got a good coverage of this. However, inside it, there's still a lot going on. Breadth is not great overall, and our just relative performances are not terrific. But when we get down to our equal weight sectors, it's a little bit different of a story. Over the last week, there were 3 sectors that were up over 2.5%, all in the defensive nature, energy, and materials, very much in the inflationary camp, and utilities jumping in there now with a lot of the things that are going on right now. Interest rates in that also may have a little bit of a role if interest rates cool off elsewhere. But pretty much for the rest of it, everything else was negative for the week. Real estate was about flat, and consumer staples here didn't perform well for the week, but still is at 73 and pretty steady across the board. Over the last quarter, it's still up. Now, before we jump into our subsector review, I want to move over to our macro page and pull down the page till you get to the market weight sector ETF RS rankings. We like to look at them this way as well, because whereas we very much like the way our equal weight index is set up and they give us overall market views of kind of what's going on everywhere, we can also get an idea of whether large, small, or equal weight mid caps and pretty much across the board are outperforming by looking at them in their own rankings. Market weight sector ETFs, we just use proxies for each one. We use the vanguards here. And as you can see, energy, utilities, consumer staples, healthcare. It's interesting on this one, healthcare has jumped up 18 points and is now at 73. Utilities made a big move. But when we move down to the equal weight sectors, you can see here a little bit consumer staples, utilities, energy, of course, then materials. Healthcare is down in the middle a little bit more, but still has strengthened some, not over the last week, but prior over the last month. Utilities still being the big gainer for the week in that. But down in the small caps, it changes a little bit. While utilities is still a big jump, it's not above materials on small cap, and down here healthcare has not really moved much at all. So it shows the small cap healthcare is not really what's performing. It's really in the mid to large. So you want to know that going in, and this is a pretty simple way to compare them to see that. Now, from the subsector RS ranking, you can see that energy, oil and gas production, equipment services, precious metals, industrial metals, consumable fuels, oil and gas storage. So pretty much the materials, the energy, the utilities, a couple consumer staples, and some real estate, maybe an industrial for aerospace and defense, and transportation thrown in there for good measure. But it's pretty much what you're seeing is these are the areas that are working, and they have worked over the last week, and most of them have been up in the RS rankings for quite a while. You have a few moving up here with some of the utilities jumping up after having some rough time, and the REITs. Now, the REITs are still not out of the woods, as we'll see when I get down to that segment. However, some of these others are already moving pretty good, but when you look inside, there are still charts in there that look like they could continue to play some catch up, that don't look like they're too far extended. A lot of charts are extended. That doesn't mean they're done. It just may mean they need a little bit of rest. So we got to be patient, maybe give things a few days to build out flags, things like that, to see if this kind of strength continues. But before we look over and you go through these, sort them a little bit, on the blog, you can see I put a couple different sorts for the RS movers for the equal weight subsectors. Let's jump over and take a look at our quick views. And as you can see here with the percent above the moving averages, basic materials are kind of a tale of two stories. Materials. Basic materials and chemicals are still down, but they're starting to get dragged up a little bit. However, industrial metals and precious metals are really strong across all the MA categories. Consumer discretionary is very weak. You can tell information technology is very weak, and healthcare and communication services are still having a rough time. Healthcare is improving more in the short term, as we see. Again, one of the reasons I wanted to kind of highlight and look through it. But where our strength really is, like we said, industrial and precious metals, the energy sectors across the board, consumable fuels just now really kind of starting to come up to these high levels like the others, and also transportation. And then, of course, utilities made strong runs here just recently. So we want to make sure that we're paying attention to these, see what's going on, and looking in those areas, which we certainly will. We're also going to take a little bit of look at real estate. Commercial REITs is the strongest area there. Real estate services is a little messed up in our sector thing. A few of the names are missing, so we're going to kind of disregard this for now and check in and get that fixed. But just wanted to make sure you knew. Don't put too much weight in that scenario. We look at our shortest term breadth measures. We go through the percent making new 10-day highs, 10-day lows, percent above the 20-day moving average, and the breadth. There's a lot of red on here, and in certain segments, once again, you see a lot of green. From a short-term breadth standpoint, the reason real estate jumped out to us is look at all the green, and real estate services really has a lot of the Redfin, Zillow, some of those different types of things in there, so a lot of those have been hurt with this kind of market as it is. So let's take a look here and kind of look at some of these areas that have remained strong. Materials, real estate, utilities, energy are really the top dogs there. A couple of things in consumer staples, even though the overall scenario is not that strong. One of the things that we do want to make sure we note here is that a lot of these areas that are showing strength have been showing strength for quite a while, so it can be easy to think that they're too far gone. And in some cases, there are certainly some of the holdings inside there that are, but we're going to take an in-depth look at each one of them. I'm going to break it up into some segments, and we're going to kind of see where we still might find some opportunities in each one of these areas that has been strong and remains that way. So let's get ready and dig in. Now, of course, the first sector we have to attack this week is energy, with oil going ballistic and things continue to move up strong. Our equal weight sector has been on the highest relative strength other than a few little dips here back in the late into last year, and it broke out in January and February and now continues to run as a sector as a whole. You know, there's a lot of areas here. The breadth is super strong. All of the moving averages over 80%, and the new highs making really strong move here. But from a much longer term perspective, you can roll this back, and I will in just a minute, and see that some of these areas are just, there's still room to go. But in the short term, we've seen big moves here. We see the McClellan summation just now starting to try to move over zero after long times underneath it and spending a lot of time in this downtrend. But as we look at our equal weight sector here, you can see going back all the way to 18, this is just now making this larger breakout and trying to move on higher. Now, one of the things we can do when we go in here, you can see the relative comparatives are still really strong and seem to be accelerating with all the geopolitical issues. The percent making short-term new highs are running with no new lows here in a tough market. So when we go down now to look at the subsectors, energy exploration and production has been the leader and has really been the big runner. But we've really started to see over the last quarter that oil equipment and services is kind of playing right along the lines and has been performing right with it. Your consumable fuels and your transportation are the ones that have lagged a little bit, might have some more room to move higher. But again, there are still opportunities inside each of these. There's a couple different ways to find it. You can go to the ETFs, which we're going to look at a few here in just a sec. Or we can go on down here to the bottom if you want to just go straight into energy stocks and look at just the rankings of the energy stocks and sort these in different manners to look through some charts and find. All these links go to TradingView charts. But if we go back up here to the ETFs, I'm going to spend a little bit of time in here. We knew natural gas was there. We talked about it last week. Oil, equipment, and services. Small cap energy was a huge jump this week. But again, not sure I want to jump in and chase that whole one. Oil service has been one that I felt was a good opportunity this week and just kind of missed some of it. But again, still think over the longer term it has a good run. I marked up this chart, or good potential ahead of us. RSI is just now moving over this kind of flag area on the RSI during this breakout, which it kind of consolidated on the daily. I'm going to back it back out so we can see right underneath the breakout level, and then moved out towards the end of the week. Again, if you're looking for a 1 or 2 or 3 day trade, probably not the right idea. If you're looking for a longer move, longer term, you could put some in here and maybe look for a check back, or maybe even a deep check back to the bottom of this candle around 240, and kind of see how things hold, because there's a big volume area right in that particular area where it gets bigger right here. But value's all the way down here. I'm just not expecting it to head back there that soon. Also, you could look at the equal weight equipment services. Again, this one looks like it hasn't quite broken out yet on the longer term. Maybe get some of the smaller names in here, and you can see here it's just now breaking out on that level. RSI has already broke this little consolidation, and the weekly RSI is just now moving into a bull range. This could have a lot of room to go if we continue to see energy move. Now, oil exploration and production, as I said, was the big runner, and it really has been the one that's jumped out ahead of things. But again, when we look at these two charts I marked up where the volume patterns are and all that, it just broke out of these again this week and ran. A lot of volume coming in at this point, and on the weekly chart it looks like there still could be plenty of room to open this up and continue to work our way out. Now I'm going to jump in now to some of the actual equal weight sectors that we work with. At this point, I'm going to cover 2 tonight and just show you that at pretty much any of these we can find charts that still look good. Oil equipment services, like we said, it's broken out. It's in a good uptrend. It's running. RSI is above 70. CFG at 100. So it might be a little bit hot at the moment, but again, not overran. Breadth is pretty strong. Everything above 80% and moving higher. McClellan summations on a buy index, which of course we want to see. And the relative comparatives are all moving higher. It's making new short and mid long-term highs. And we get down here to the actual stocks. I've already marked out some that we're going to run through here real quick and take a closer look at, because I believe there are still some opportunities. NOV is one that broke out on Friday. Okay, NOV Inc., as you can see here on the daily chart, it was a big breakout after a nice consolidation here, had a 7% move. You know, short-term traders might want to see if it backs off some. If you're a mid to longer term trader, look at this weekly break and right above this level. This is a polarity level here that now looks like it want to make it above it on the weekly, with the weekly chart here moving above into a new RSI bull range, or you could say it held the old one here and we're going back on nitrous. This breakout could easily make its way back up to this 26 or 2560 in time. You know, and the way things are moving right now, it may not be that much time. So we'll just have to wait and see. You look at the next one I have marked out as TDW, Tidewater. Again, a very similar to where it had a kind of a handle type scenario, maybe almost a fractal, because as you can see here, it's almost like this is a cup with a really large and kind of sloppy handle, and then another handle over here. But we broke out the last couple of days and it closed really strong on the highs. It's got earnings coming up first of the week, so wait and see how that comes. Maybe it can bring it back down into this pattern holding that 1450 area, or it may just send it on up. It may be past where we can make a good opportunity. When we move to the next one, AROC, this is a smaller name, a $1.3 billion name, a 6.5% dividend in the equipment services part. You can see the value area for volume here. It's making its way above that and then gets this breakout here. We could make our way back to these highs around 10 to 11. It's at 884 now, so it's about a 20% move with a big dividend while you wait in an area of the markets that are very strong. Now, oil and gas consumables, as we said, this is one of the areas that was not as strong. This is one of the areas that's kind of lagged a little bit, but even in here, we're starting to see the breakout happening. It's starting to move away from that area. RSI is strong, CFG is strong, breadth is all strong, not as strong in the 70% range, still giving us some room to move, but we have our summation just now turning back up, showing these guys are really starting to participate again. You can see that it's not a leader versus energy, but it's a leader versus everything else. So yeah, it's not quite as strong as all the other energy, but we could see that some of these names waking up. You can go down here and search this however you want. Of course, we have BTU, Oxy, Some of these names that I've already moved 30 to 50% in the last weeks to months, over 100% for BTU in the last month. However, there are ways to search this, ways to look for different charts that have not moved as much. Same thing. I have already marked quite a few. We're going to look through here really quickly. One that's a pullback and looks like it's almost ready to move again. It's in a weekly bull range. And on the daily, it got hit on earnings, pulled back below the bull range, which is one danger we have to work at. But we've got a pretty good level here at 17 to work against, maybe slightly lower. And if it can move above this mid area here of volume, which is what it was trying to do at the end of the week, middle of value, we could move back up towards these highs. If it can get over those, it's got plenty of room to run. We just don't know how quick we can make this happen. The next one we're going to move over to in the same space, good looking chart, is CVE. This is one that's been stronger. It's pulled back in its bull range while it's in on almost like a running correction right up against the top to start the week. This could be an explosive breakout if it wants to move. Now, the weekly RSI is a little bit higher. It's going to head up into the 80s if this does break out. But however, as we've said many times, some of your biggest moves come with RSIs that are pretty high. You just got to be more cautious about that turnaround. The next chart on here is Valero. Everybody knows this name. It had a nice strong run, and then now it's come down here and pulled back to an RSI bull range test on the daily. CFG got down to 0, and the weekly is still really strong. And then we pull back just slightly, and you can see right here, I didn't put the line there before, but I'm going to do it now, that we can take this horizontal ray, we can pop it right on top of here, and that's kind of where we cleared through as well. The volume area that's right here was a little closer to this previous top and some of the support either. So if we can continue to move over here, that's good. Any kind of close below probably 181-ish might be a little bit of a warning sign short term. See how it sets up again. The next one is PSX. Again, it's pulling off a little bit, not running like Oxy and all them, but right next to the RSI bull range. Earnings and dividend are both past. Weekly RSI bull range here that looks like it might want to be putting in a positive reversal if we get a move up this week. And again, this is a $36 billion company with a 4.3% dividend while you wait. The next one we're looking at is Enbridge. This is one that's breaking out at the end of the week on a big daily and weekly breakout. Really strong after earnings that missed. A lot of volume coming in. Weekly RSI bull range held on that last pullback when the daily got pretty trounced in the bear range, but we've come back since, putting in RSI positive reversals and continuing to move higher, something that might be worth a look, especially if it moves sideways for a couple of days. And then something like PBF, again, another refining and marketing company with this beautiful weekly pattern here. RSI daily came right down to a bull range test and then had a really strong move on Friday. So again, you know, some people are brave enough to just buy this and hope it can continue. Some people want to let it flag out a little bit and see if it can hold this area. You know, you got to do how your trading style works. I'm not going to say anyone's right or wrong, but that's something we've got to make sure we're focused on. So that's my energy coverage. So we're going to move on next to the material sector in the next section of this video. But I hope this gives you some ideas that even in a sector that's ran really hard, there's room in energy to keep going. Next, we're going to hop over here to the materials sector and take a look at the equal weight material chart. Starting with the RSI chart, you can see our relative strength rankings up here at the top are all up towards the top in the 90s, 3 month, 6 month, 12 month. Very strong indeed, and you're seeing that this is just now trying to break out of a sideways, almost like a base on base type opportunity. RSI in a bull range, which is not very frequent right now. So this is a strong sector, as we've said many times, led by precious metals, industrial metals right now, but we can see the potential to pull some of the other areas up, especially if some of these material ETFs start getting some flow because of the metals and all of those. It's going to have some natural offshoot into the chemicals and the basic materials. Breadth is in the middle, but still well above the overall universe. Still showing strength on the relative comparative, very much versus the universe and everything else. And we're also seeing new highs definitely outpacing new lows, but you got some new lows jumping in here. Most of that's in the construction materials and things like that. Now, from a ranking, precious metals and industrial metals, those have been kind of swapping. Industrial metals were the king for a while, but precious really started moving this week. And then over the last couple of weeks, actually, and then chemicals and then basic materials are down there with some construction materials, things like that, having a tougher time. From an ETF standpoint, which we're going to take a look at a few, we're going to see that, there are some that have moved. There are some that are still opportunities. Short term, you might see some sideways to pull back, but longer term, these look set up to really have some strength. Now, XME is what everybody has seen. This run has been just tremendous, and I don't think you could chase it in good conscience right here and try to put a new position on. But this thing pulls back, it'll set up again. I have a feeling this, if we are going to see some longer term inflation, this will hold up and continue to perform over time. But this one is just not the one you want to try to jump and chase at this point. Now, GDX also having a strong run here. Looks like the chart is a lot more set up to continue to move. RSI is not quite as hot. It's had some more intermittent moves in here until the end of the week, and it broke out and jumped out into closing this gap over here, which was a big resistance potential. As at the same time, it broke this weekly trend line, moving higher and moved into a new RSI bull range here on the weekly. The daily came back and back tested the 60 and moved up and is currently on the nitrous. I mean, that is a really solid look. Again, finding entry and position sizing right now is something that you're going to have to work with to try to be comfortable with where you're at and your longevity or how long you want to stay with the trade. The next is copper. Copper finally broke out this week after kind of being a laggard. On the short term, RSI is a bit hot and could flag or come back some, but on the longer term, you can see this nice rolling RSI with the base itself, and if it breaks out here, it could continue to move pretty strong. PIC is another one in there. That is the Select Metals and Mining Group. It's run but not as hard as the XME, and it's got some of the other, so like it says, some of the metals and mining and some of the background company type stuff. It's just moving into new RSI bull range. The weekly is, and the daily is already up there and running on the nitrous here. Again, just breaking above this little level Friday. It has these all-time highs to test. The question is, can it get over there short term, or does it have to consolidate some? And then we look at the sector as a whole. Here I chose IWM for tonight, but there are plenty others that are similar that you can look at. Just now moving into a new RSI bull range. That's what I meant. These metals have already been moving, but maybe some of these other parts of the sector are starting to get pulled higher with flows and things of that sort. This bull range shift here, noting the weekly never lost the RSI bull range or the trend line during all of this mess we've just recently been in. And this one looks like it's one that if it gets above this volume area and bar here, it's got some pretty good open space above it. So you don't have to go to the individual areas. You can even go to a broad one and still see a pretty strong opportunity in the ETF land. Now, when we move over to industrial metals, I'm going to pause this. I wanted to move it back to the top of that. Y'all having to see all the scrolling, but when we move it over here, you can see this one's already run. The equal weight RSI is up at 80. Again, it's kind of hard to take a lot of the positions in here, and a lot of these areas have already run really strong, extremely strong breadth across the board here. So it's one of those areas to where a lot of people would say we're too far, we're done, it's gone too far. Now, I completely agree that it can consolidate and pull back some, but as we're going to see in just a minute, when you have strong areas like this and the big names that move fast, they're up 20, 30, 40, 50, 100%, that's great. But when you start digging down into these areas, you can find some charts that look really good. Worthington Industries right here. We have earnings coming up in a couple weeks. But until then, it's breaking out of an inverse head and shoulders pattern in a new RSI bull range on the daily, and the weekly looking heading up there for a bull range test. If we get this breakout and we can catapult above this trend line before earnings, you could get a really strong move. Maybe you could take it off before the numbers. The next one in industrial metals that I looked at was CRS. It's one that looks like it already had a big surge and now it's flagging that out. It can go either way, so watch each rail. But if it breaks this upper rail, it gets over this value area, then we could really start shifting into testing these highs here as this market continues to favor this area. Next, we have FCX. You know, this is one that's already broken out of this cup and handle. The question is, can it back test this 46 area? It may never look back because its options flow is huge right now. But let's say it does. It moves back to 46 and you might have a good opportunity. So set an alert and come back and take a look. Another one is Cliff. It's made a huge run, so we might want to see it move sideways a little bit. But again, in the market we are in, if it breaks this highs, a quick, nimble trader could put pieces in, take pieces out, and still make some opportunities here, even if we see some decent volatility. That just needs to be your style to try it here. If not, let it flag out some. Hope it flags out before the breakout, and then you can get you hopefully a little bit early entry before it hits that high again with little better looking RSI. When we go next to SID, this is one that's an old favorite, but it got killed back recently. We have earnings coming up, so we want to wait until we see that. But look how this sets up. Maybe it gaps up and we can't do anything, but this one starts to set up as it moves out of value area. There's very little volume up here to this probably 8 area, and we're only at 568. So if it doesn't take all this up in earnings, if we have a relatively positive outlook, you might be able to find an opportunity in here again. But I just wanted to show that as a name that, you know, is not one of the top runners, but looks like it has some opportunity. It came right and checked back to this big volume area, overshot it, but on this last couple weeks in this Morningstar type look, I said look, not pattern, because the pattern needs to come after a downtrend, and we can't say that right here. If we break on up higher, this thing could continue to move as well. Now moving into precious metals, you know, same thing. I'm going to pause and go to the high part of the page and look at our actual equal weight precious metal sector. It's just now breaking out, and when I back out, it's an internal breakout. We haven't got to the new highs on this one, but the RSI is in a strong bull range and moving up in the 70s. The breadth is running right now. You're in the 90s and the 80s from an NA breadth standpoint, and it's easy to see right here that you got a nice trend line that is trying to break here on the advanced decline line in precious metals. So there's a lot of good looking things in the breadth, showing a lot of things are participating. The relative comparative is moving almost straight up, and lots of new highs, 10-day, 21, and 63-day. Now we move down to the precious metal stocks. You can sort them, rank them, look at them however you want. Flip to trading view charts. If you are a member, it'll take you straight to your templates. I am, so here's one of my templates here that I look at, and I've marked a couple of these up. Don't want that. But as you can see here, AEM is one of the gold charts that hasn't already gone, and earnings are past. They weren't great, but it's continuing to move higher regardless of that. That is a great sign that there's some demand there. If we can get a breakout here early week, this one can easily go into the mid-60s in shorter order. And even though the sector itself has already moved a lot, this is one that looks like it's still got some juice potential in it. The next one is PAS, silver miners. Just broke into an RSI bull range. The weekly's still in a bear range, but RSI is leading price right now. If we can break this downtrend line, you got plenty of room. You go up right now to about 28.40. From there, it can really move on up into these other areas. Got a couple gaps in here to watch, but that's really some distance from where we are at the moment. Again, in a very hot space. Next one, FNV. This one had a really nice big weekly pattern right at the top of it. Daily has ran a little bit strong, so you want to be kind of careful. But again, the weekly's just in a fresh bull range. The daily came back and back chested it and it's heading back up. And even though RSI is at 74, man, the moves you can see in RSI going from 74 to 85 or 74 to 90 are monstrous. So again, the higher the RSI get, the more dollar move you get per RSI point. So the higher it gets to the edges, the faster the moves are. They just also are fast in both directions. Sorry, I went backwards on that one. The next one is AGI. This is a little different look. It's a little earlier. Daily RSI is just moving into a bull range, and it's just hopping over this little low base / consolidation. Again, a $3 billion name, lesser known, but another gold name that we might be able to take a look at. But jumping even into the laggard sector, chemicals, I'm just going to stay down here at the bottom. The top charts don't look that great yet, but I'm just showing that you can get outside of your fertilizers, which have killed it. There's definitely a lot of stuff that looks good in here. We talked about Hawkins weeks ago, some of these others. But tonight, I just pulled out a few charts for us to look at that are worth taking a glance. Westlake, WLK, looks like its daily just broke out of a really large ascending triangle, had a failure during the tough markets, and is now consolidated and moving back higher. On the weekly, it just looks like a beautiful move into an RSI bull range. The daily's right at 60, so there's plenty of room to move in these indicators if it wants to. And as you can see where I put my thing over here on the weekly chart, my pointer, it's just breaking out, and the weekly volume has been strong as well. Another one, MEOH. This is another name that, as you can see, is just now in an RSI bull range right around the 60 level, has been consolidating here up under the highs on the daily. A breakout over here is going to pop it over this weekly volume levels right up here, and there's just not much else until we get up towards these other highs. Okay, so as we get up through here, we can go up, I'm sorry, not highs, this next piece in the mid 60s, but again, that's 10+% from where we sit right now. The final is basic materials. Again, there's a few in here you can look at. Sorry, I keep saying again, but it's like each one, even though they look like these weren't the strongest sector of materials, there are some great charts in here. This is a $15 billion company, a Brazilian company, so something outside of the energy in the Brazil play, bouncing off 40 twice with a strong day on Friday and looking like its RSI wants to head up into a new bull range on the weekly. So, a break over this area right here, getting maybe over this value area at 1198. Right now we're at 1123. You could take an internal breakout about 1140 and work against these recent lows. And then our next one in the materials is PKG. Packaging Corporation. It's one as well that looks like it's consolidated this flag pretty well below the highs on the daily. It held its RSI bull range during all this after the gap up on the last earnings, tested that gap, and is now back towards the upper rail. A break here gets you over a lot of the volume, puts you up to test these highs. A break of those highs breaks all-time highs. So it puts you in blue sky area, in, again, a strong sector that looks like it might be kind of fanning out a little bit. So that's our materials. We're going to move on to the next sector in just a minute, so let me end this one. All right, the next sector I'm going to jump into this evening is utilities. We're going to take a close look at what's going on there, because this one looked like it in our equal weight sector. It's just now breaking out, moving up in relative strength on all three levels, and continuing to kind of show itself here over the last couple weeks. It's made a strong run, stronger than you usually see in utilities. They tend to be slow and kind of lumpy, but right now it looks like it is wanting to play its defensive role. All of the breadth is really starting to strengthen, especially in the short term, having the percent above the 20-day moving average at 90, the McClellan summation turning up here, and the breadth thrust and the oscillator both running. So this sector really got some attention here just recently. You can also see it in the relative comparative. It is right there, running higher against a lot of these previous levels and making some serious breakouts. New highs in the sector are high as well, percentage-wise. Now, some of these percentages in the breadth and things like that are going to be jumpy because utilities are a pretty small sector. When we look at the subsectors, gas, multi-line, electrical, water, and then independent renewables. Independent renewables has a lot of the trash. However, that area is an area that just recently started to wake up a little bit on the solar side. Let's see if any of the others do as well. Now, from the utility standpoint, we're going to take a look at a few of the ETFs and kind of see where we are. Starting with the XLU, you can see it's right near the highs on the daily, made a strong run this week, like I said, but again, not huge overall, just huge for utilities. Broke into a new RSI bull range in that process, and the weekly is right now testing 60, but it hasn't made it back into the bear range. It's held each time it's come down, and now it's challenging these previous highs here. Again, it broke out before and pulled back due to the market weakness, and now it's starting to really move its way back up. The next is ECLN, extremely low volume, but this is one of the carbon impact ones. I think there's another one that's a little higher volume, so you may want to search that one out. But here you can see it's breaking out of a base this week on the daily to new all-time highs. Again, a pretty young play. And then our final one is IFRA. Similar to the breakout in utilities, it's a little below this little area that ran up. But if we can get a move across here, this weekly looks like it's ready to move up, and it's got room on both of its RSIs. Now back to the utilities page. It's a small enough sector with only 100 and change holdings overall that you could go through and just look through the rankings as a whole. I've got them sorted here by the RS movers. Again, in the site, you can sort them however you want to look for your opportunities, and then click through to TradingView to look at the charts. Always good. The RS just basically leads us to where we want to look. Now we're going to jump through though and go through each sector and kind of take a subsector, take a look. As you can see here, gas is really the runner right now. RSI is getting high, but again, can go higher if it wants to. Breadth is pretty good on all these, but remember we've got pretty low totals as far as names. I think there might be 13 in here. The relative comparatives though are real strong to the market, making new percentage highs. And as you look at these scenarios, I'm going to jump into a few of the charts and just show you where you kind of are. In SWX, Southwest Gas Holdings, it just had bad earnings. It looks like it's shaking them off, and it has the chance to break out here from a really long weekly base. Real boring kind of stock, but 3.37% dividend, and looks like it's going into a fresh RSI bull range here that could definitely move higher. The next gas utility that we're looking at is Chesapeake Utilities. Again, it had this big downtrend here into an RSI bear range, just recently broke back into a bull range, and a strong day on Friday, up 2.7% with a big candle. And then an RSI weekly bull range here into the support on this nice trend off the September 20 lows. The next one in utilities and gas is NFG. This one looks like it's about to break out on the daily, just moved into new bull range after earnings here a few weeks back. And the weekly looks like it never lost its bull range in this nice trend. Came back and just touched on the top of the MA bands, and now is looking back to challenge the highs. A breakout here has got some room on the oscillators to move if it wants to. Okay, looks like I did that one twice. So that's there. Then we move into multi-line utilities, which means it can have electricity, gas, all of that. The gas really has been a lot of the driver recently up to this point, but as you'll see in a minute, that might be ready to change here. As the gas is moving up, strong RSI bull range, never really lost it during any of this mess in the markets overall, and now is breaking to new highs. The breadth, again, light number of holdings, but it still looks like it's pretty strong. The summation moving up, everything is moving in the right direction. It is not one of the strongest relative comparatives versus the other utilities, versus our equal weight index, but versus all the major indices, it certainly is still a big outperformer. And looking down here at the stocks, I'll just show you a couple I jumped out here. Again, you have CNP, Center Point Energy, breaking a big breakout to end the week last week, but has plenty of room on both the RSI and the daily and the weekly. And this move off the lows, while strong, just moved into a fresh RSI bull range. It has peaked here quite a few times before, but at this point it's trying to make a new strong high in a market that favors this type of holding. You know, I'm going to run through a few of these charts and we'll stop on them, and I'll just kind of let you see what's going on. CMS also making a big breakout Friday. AEE is right there. Earnings is past. They were bad earnings. It shakes it off. We're now back towards the high. You have things like Dominion just breaking out. WEC is not there yet. Maybe not the strength. PEG broke out DTE broke out this week. It's PEG, as I noted on my notes, that is about to break out on the daily with a nice strong weekly look that has plenty of room on both. Earnings are past and they were a beat. We're about to go into the dividend. NWE is one that's been underperforming, but as you can see here, it's breaking a trend line, could play some some catch up now that this bad earnings has been again shaken off. ED, Consolidated Edison breaking out as well. So you can see a lot of the names in this area. Electric utilities, I'm going to pause. Sorry for the pauses, but I didn't want to pull you through the page, and I'm also not going to start these videos over since I've got so much content in here at this point, just for small slip-ups like that. So let's keep moving. In the electrical subsector, as you can see, it's just now breaking out. This is a real interesting one because with the gas and all that already running, same thing. If we get big flows into a lot of those ETFs and a lot of those areas, it's probably going to leak over into some of these names as well. And this is just a beautiful setup that moves strong here at the end of the week. Moving down in the breadth here, there are more names in the electrical side and the multi side. So as you can see here, this breadth, these percentages are pretty strong, and the summation's just now turning up. And then you get down here to the relative comps. It's just now turning up against utilities as a whole, and it's running strong against all the other indexes. Percent making new highs on 10, 21, and 63 are all strong. I mean, these are all things that we're looking for. And as you can see here, when we go in and look at a couple of these charts, the big names are fine to look at. Southern Company looks like it's about to try to move into RSI bull range if it breaks over this area. There's not much volume up here in this top where it was before, and then we can go and potentially challenge all-time highs here. Good dividend while you wait, and you have a chance because the RSI weekly never moved into that bear range. This sideways move to higher just continues to test the MA bands and then find support in them for now. Another one is P&W. This is more of a reversal play where you can see it came down really hard. It went up into an RSI bull range, peaked, came down, tested the low of that bull range, and is now moving back over 60 with some strong action. On the weekly, it could run into this downtrend line here, so we're going to have to look for some things there. But again, it's one of those areas to where there's some room till you get there, and if it can break over there in this value area, it could move back up into the highs in a nice defensive sector. Looking at some of these areas in the electrical, I have these kind of segmented out myself, but I look at some of these other plays in electrical. There's a lot of other charts. Otter looks like it's consolidated a nice base. The weekly RSI never lost the MA bands or the trend breakout or the RSI bull range, as CFG on the weekly got negative, and now the RSI held 40 just recently as one of our early signals and has the potential to break over this 63 level. I mean, these are just great looking setups that could have some really good potential, and you just don't have to be in some of the other areas that look tougher and tend to move faster in case we run into problems. A lot of these have good dividends too while you wait. Here, Duke Energy looks like it's right at a potential breakout. Had a strong move last week, and it can get over this volume area and it can continue to move into the highs, and that would be all-time highs for that one. So a lot of these utilities, now we move into water. There's only a few names in the water, so what I'm going to do is just run down the list of a couple of them. AWK, as again, water was getting killed. I mentioned that. Now it looks like a trend reversal moving into new RSI bull range and into a volume vacuum here that could take it up to 167, 68. Clearing that one could get back up into these highs. CWC, I mean, again, just running through some of these charts. A lot of these are bigger downtrends, but like here, SJW looks like it's trying to make a reversal into a new bull trend. Never lost the weekly. This one's a lot lower, CWT. It's in still a hard bear trend, but testing the bull range on the weekly. I like this better, MSEX. It looks like it's already moved into the bull range and never lost it. Never lost the MA bands on the weekly, and now has moved back above them and is curling them up on the daily. These are some things you can work against and work with in these particular charts. AWR is kind of like AWK. PCYC, again, not my favorite when I'm looking at these charts. There are much better looking ones in that water space. And then we have, of course, independent renewables. This is an area that has been kind of the laggard. It is trying to base out, though. It's still in an RSI bear range, one of the only ones in the sector. So it's probably our last go-to. It's only got a few names in it, but it is starting to perk up on the relative strength just because of the defensive nature of the sector overall. We only have a few names in here. We got to be kind of careful on what we're looking at on these and how much we're using that breadth in this kind of area when you only have 5 or 6 names. None of these charts are my favorites, I'll be honest. So let's just go ahead and move on. Say that there's a lot of good stuff in utilities. The renewables might not be the ones, but gas started it. Multi-lines are right in the middle of it, and electric is starting to break out now. So I hope this gives you a good review of the utilities sector. I'll move on to the next one here in just a minute. All right, next we jump into consumer staples, which is another defensive that has really not looking like it's like screaming, but it has some spots inside of it that are really working. And then there's one area that's just not. There's 3 subsectors in here, but when we start with the consumer staples equal weight sector itself, you can see it's more moved sideways to down, but none of it's been really bad here during this last. So it does have some defensive nature to it, but it is still in an RSI bear range right here. We move down into the breadth of it. None of that's impressive. It's just not a big sector, but yet it has some really strong plays, that ETFs that jumped out at me, as I'll show you in just a second. And when you look at it across the longer term, it's still kind of outperforming the market since last fall and still in that positioning. So it's something that, you know, if the markets continue to get worse, it might be an area that continues to get better. It'll definitely be better relatively probably, but it might be better overall. From the ETF standpoint, there are 2 that I'm just going to look at really quick that jumped out at me. One is just your basic XLP, and as you can see, it's moved back over the last couple months in a flagging action. Daily doesn't look like a flag, but when you flip it up into the weekly, you can see it pretty clearly as it just keeps flagging out as it moves back to the MA bands in this RSI bull range on the weekly. This time it's holding around the 60 level. The daily still needs some improvement to get over here over the top. But again, you look for a potential of a trend line break right here. And this could get this thing back moving here really quickly into the new all-time high type area. Another one is PBJ in here. This one's right at the breakout level. RSI moving into a fresh bull range on the daily, and the weekly never lost its bull range. This is one of those areas that just really looks strong and looks like it's ready to continue to move. Now, I'll let you go in there when we get to the subsector. I'm not going to go through each one of the stock holdings and all that, but you can go in and look at it yourself. Now, when we looked at the subsectors, the top was food and staples retailing. This is a subsector that's really showing some strength, broke out this week, high relative strength versus all the other subsectors, and it is high versus its sector as well. RSI bull range, everything's looking up for the food and staples retailing. Breadth is strong even though there aren't a lot of components. The relative comparative is running higher after this breakout. All of the right things that we need to see. Not a ton of holdings. And you know, everybody knows about the things like Kroger and, you know, that have already made big breakouts. Let's look at that. Let's look at Kroger's already made a huge breakout. Another one that's made a big breakout, I believe, was SFM. SFM's already made a big breakout. But look at GO. Look how beautiful this chart is. Right about to get into the gap. Has room up to the next one, which is around 34, and then up to these highs around 36 if it makes it above that. And then we get into, yeah, you might stop at this gap here, but this volume vacuum up to this area up here is pretty large. And then we get into a scenario to where it's just made a new fresh RSI bull range. The weekly's not there yet, but this last little pullback did hold at 40. So this one looks strong if it can break through this area. Also, another one that I was looking at here a minute ago is something as big as Walmart. Looks like it's just now having a fresh downtrend or breaking this downtrend line as the RSI moves into a new bull range. On the daily, the weekly never lost it, but it's just moved sideways for quite a while with some of the inflation worries and other things like that. And as you go through this chart, you have a lot of things right before earnings here on UNFI, so I'd be careful. But look at the little base setting up here and the potential for new RSI bull range after the weekly held the bull ranges and now turning higher. A lot of charts in here. Some of these have already moved really strong. But again, as you continue to work your way through them, you can find some of these areas that are just now breaking out into new moves, or some of the things that are reversing. This thing here like Price Mart, which I marked up a few minutes ago. It came down and lost this previous level, but now has regained it on the weekly. The daily has broken this downtrend line, and when I back out, it's broken above this big volume area into an RSI bull range with RSI leading price over here. So a lot of good potential here as we move up to see if this one can keep moving. BJ's got hit recently on earnings, trying to hold. With strong earnings and it gapped down, see if it can hold this volume area. But again, I think there are better looking names in this potential area. Cisco Corp, always a good staple in that area, right near all-time high breakout. RSI's in a bull range. It did pull down here just recently back to this little area, so kind of see how this hammer works out, see if it can reverse back up and challenge those highs again here really shortly. Another one is Ingles Market right at the breakout level. RSI in a fresh bull range, weekly in just a strong bull range. No real reason to think that this one cannot continue based on how it looks. And as I just said, we just went over PSMT. Food, beverage, tobacco, looking at the chart itself, it doesn't look great. But as we looked at that ETF a little while ago, which is a cap-weighted ETF, there was a lot of strength in there. So I'll let you go down if you want to. The breadth is not great. It's not terrible. But as I've said, even in these areas that have decent relative comparatives over a little bit of time, you can come down here and you can resort this and you can look through some of these names and you're going to find a lot of strength. RS movers is the way I like to sort it a lot to find out kind of what's moving up in the rankings and might be ready for some opportunities now. Farm, a very small name, so probably not something many would want to jump into, but as we jump in and see, you can see this one's still in a downtrend. But we go up here if you want to, and something like this that doesn't look super strong, you can go up to the high RS and take a look at those, because you still can very potentially find some strong setups. High RS in a mediocre sector. This one looks like it's already ran a bit. Still can have some good opportunities. And then, of course, finally, we have household, durables, and personal products, or household and personal products. Sorry, not durables. And this chart just looks terrible. It's in an RSI bear range towards the lows. If we're going to be in this sector, why focus in this area? There's just no reason to with this kind of sloppiness. But again, if for some ungodly reason you feel you have to trade in this area, look at these things that are moving and RS movers in the area and the strength in the area. Church & Dwight is a really solid company, whether the chart's there or not. That's what it really comes down to. It's the strength in this weak area, and it would look like we have a pretty decent looking chart. So I think it's something we can definitely kind of move our way into and see if this little base reversal here can continue. RSI on the weekly pulled down to this bull range. Looks like it's putting in a big positive reversal as it back tested this breakout level on Church & Dwight. This is a real strong company. This chart looks like it has good potential right now. So, even in these mediocre areas of a defensive sector, you can find some real good gems if you're willing to glance through a few charts and let the chart decide what the trading opportunities and trade plan might be. That gives you consumer staples. That kind of covers that area. Again, I'm sure there's plenty more in there, but I just want to make sure I highlight a few, give you some things to look at closer and try to develop some ideas of your own. All right, we'll move on to the next one here in just a minute. Okay, the last two sectors we're going to cover a little bit quicker. This is getting really long. Got tons of information in here. I hope you had a cup of coffee or something, or we can break it. I'm going to break it down into different segments so I can put them out separately because it's going to be hard for someone to watch all of this at once. But real estate sector, we're going to go through this quick because even though I do like some of the ETFs, the overall equal weight real estate sector, as you can see here, is really just right in the middle. Defensive. It has held up pretty well here recently and starting to make its way back towards this upper rail of this base. And after it back tested, a move over here would be a strong sign for the overall equal weight sector. The breadth is mediocre, better than the overall universe, but still not wonderful. And the relative comparatives are just now starting to kind of turn back up for us here. Showing some strength, trying to make some small breakouts. The new high, new lows are, again, mediocre. But it is a defensive name. It did catch my eye in the intermarket analysis. It also does have some subsectors here that have started to make some moves over the last week and are starting to peak back into positive after having some negative. Now, real estate services in mind right now, it's kind of messed up. I don't think these numbers are real accurate because it's not showing some of the names it should. But it's still not a great area with the Redfins and the Zillows and a lot of those types of things in there. Remax, some of those that haven't been killing it. But again, let's wait until I can get it fixed. But these other three really are the important ones to focus on. They're the true REITs. You can go here and we can look at the ETFs. This is what I want to focus on more tonight. But then we'll touch on each of the subsectors. Just to kind of look. But again, another fairly small sector, so you can just go through and rank all of the real estate stocks that are in our full sector if you want, as opposed to jumping down into subsectors. I'm going to do it via subsector because that's kind of how I like to run through things. But we're not going to go through too many stocks in this area tonight because I'm going to go ahead and try to wrap this up here in just a bit, give you an overview. But from the ETF standpoint, the one I really like the most here is KBWY right now. Decent volume, 5% dividend, high dividend REIT right now, and it looks like it's trying to break over this volume and value area on the weekly. If it can make this move out of here on the weekly and the daily, have a potential for an RSI bull range shift, which puts the price probably somewhere up here in the breakout level, which can continue to move. Not going to be a fast mover with that kind of dividend, but this is kind of a volume shelf that really could gain some attention and give it a little bit of a boost. It's got an RSI positive reversal on the weekly. It never lost its bull range during all this. It moved sideways while everything else was getting hit. The next one in there, just a basic real estate, you can kind of see, give you an idea of how things are reversing. If we start with the weekly, you can see it came back to these previous breakout levels, tested it. This is kind of a good RSI, a candlestick bullish engulfing after a pullback into the MA bands, moving it back above at the RSI bull range test with CFG negative. I mean, that's a lot of confluence right there in one area. And on the daily, you can see it had a failed breakdown underneath this nice lower level of the range, failed breakdown, moves its way back up, and now it's starting to try to get back above the MA bands. We're still in a bear range, but RSI is leading price here. And again, see if we can get some continuation here and get us a nice early entry on the right side of this base. This would be one of the areas if we saw interest rates cool off a little bit, you could see more here and a little less on the financial side. I think Dan Russo from Potomac made some comments about that this weekend you might want to look at. He does some great work. The next one is XLRE. This is the equal weight. Again, really similar looking chart, but it is definitely something that we want to be focused on and taking a look at as we get down here and see these reversals in all of these key areas, and these failed breakdowns are really the big thing that caught my eye. Even though the overall sector isn't outperforming, a failed breakdown like this really could offer some juice back into this sector. Now when we look at the subsectors, I'm going to go through the equal weights really quick. Retail is the area that's really already kind of leading out of this little base area on equal weight standpoint. Not in the bull range yet, but very close. Breadth there is better than the overall markets. The short term is leading. Longer terms are starting to try to catch up a little bit. relative comparatives have turned up, and we have some stocks in there that you can take a look at. I'm sure I'm not going to go through them right now. Residential and mortgages, again, this one's still below that little basing area. Failed breakdown, still kind of the same, but just not showing the strength to get back up just yet. Still in RSI bear range at or below 50, or right at it right now, 50.5. Breadth is mediocre, just slightly better than the universe. Just barely turning up on the relative comps. And then again, you can jump in. There's still going to be strong names. You know, you have things like APPTS or APTS, you know, apartment.com or whatever that is. Oh, I'm sorry, this is in a buyout. So yeah, that's one of the reasons that hadn't moved much after its big gap up. But you're going to find some strong names up here at the top of this relative strength, even if it is a slow area of the markets. That's what I would look at as the top, and then I would look at the RS movers. The commercial REITs are also right near the top of their area, so retail and commercial are our two top spots here in the REIT world, and starting to try to move up higher. Curling, its short-term breadth measures are starting to run. Summation is curling from intermediate, and the longer-term things are moving up. This percent above the 50-day moving average only at 30 is kind of an issue. But the 50-day or the 200-day is still above 50, so it looks like that pullback was just strong, but maybe it's trying to work its way higher now. The relative comps are there, and then again, we can get down into the actual holdings. You know, click through here, look through what you want. Right now, I think the ETF area is something I like in this to get a good range. But you know, you look and you find something like this after earnings, right at the breakout level, a really nice looking chart, turning itself up, a $4 billion, 3% dividend REIT, just moving into an RSI bull range at the breakout level. I mean, this is some really nice looking stuff. As these areas try to start to turn around. So I hope that gives you a good idea of what's going on here in the real estate level. This is another sector that looks like it's starting to emerge. It is a defensive area, so it might be that if the inflation area cools down but we want to stay defensive, real estate might be a great place to be looking for some opportunities. All right, we're going to wrap this monster up with the healthcare sector. If you're watching this as a segmented healthcare sector, you're not going to see it all, but there are lots of other parts to this weekend. I just really wanted to go through some of these areas. Now, the healthcare sector has really been the worst. It's been the zero RS or the lowest RS for quite a while. Months now, and it just looks like it wants to peak above. So there's really nothing here all that exciting, still in a bear range. Everything else, when you're looking on the surface of our equal weight, its breadth is at or worse than the universe in many cases. It's in still a relative downtrend. It's flattening out versus some, but not really outperforming. Now, one of the things that holds this down a lot is that biotechnology is a huge part of this, and biotechnology has really been a dog comparingly to the other stuff. Now, pharmaceuticals are down the least over the last quarter, then medical supplies and healthcare services. All these are worth a look. The two in the middle, medical supplies and healthcare services, have really started to catch my eye over the last few weeks. And again, on this one, what I'm going to do is I'm going to really concentrate some more on the ETFs. We've got a sortable table here. We got things you can look at. I've pulled out some we're going to look at here in just a minute, and then we'll run through the subsectors very quickly. So we can take a look at just kind of what's going on overall. But from an ETF standpoint, you've got a lot of areas that are looking good, like IHF breaking into a new RSI bull range. The weekly never lost its bull range. Why are all my charts messed up here? And they are. These are charts that should be updated like this. But still in a bull range, we're working higher, and we can get a breakout over this area on the weekly. We could certainly get some continued movement. Next, we move over to the iShares IEHS, extremely low volume, but this is healthcare staples. I think it's an interesting concept. Came down to this value area, is moving back higher. Trying to move into a new RSI bull range. The weekly never lost the bull range, We have just the basic select healthcare fund, XLV. I wanted you to be able to take a look at this one as well because it's kind of back down right above this volume or right below this volume area that if we can get a breakout above, say, 134-ish, then you could continue up and test those high. This failed breakout up here came down. It's been kind of worked out against these lows, and now it's trying to move back above the MA bands on the weekly. We never lost the RSI bull range here, and some of these are trying to make their way back up. Now, RYH is the equal weight view of this, very similar to the large cap view at the moment. XHE, though, healthcare equipment, is something I'm a little more interested in. You can see almost a potential double bottom here. It's up towards the high of its range, broke its downtrend line, and is back testing on the daily. If it can get over these previous lows, this polarity level, that could be a strong breakout and move us back up. The weekly still has some work to do, definitely. That's something we got to be conscious of. But this daily, if it can break over here, that is a great start for us to be looking at in healthcare. PSCH, the small caps are right up against that. Again, pretty low volume here, and small caps are a little more dangerous right now, so I'm not sure I'd jump that route, but I just wanted you to be able to see where it was coming out. And see, here's where our real problems are. Biotechnology is breaking down again. I really thought it had some chances, but this is just kind of like your high-tech software, things like that, high multiples, things that have a lot more uncertainty to them are just not getting rewarded at all. They will bounce strong here at some point. The question is when and how far, and right now it's not showing in these charts at all. When we move over to the subsectors, looking at biotechnology first, it looks just like that ETF, and it's pressing against those lows. We'll see if it rolls on over, if it decides to try to bounce. But when you go to healthcare services, your chart's on down there, but it's got a good bit more of an opportunity here, but still in a bear range, so let's not get ahead of ourselves too far. Medical equipment is a little more up towards those highs and looks like it may want to take that polarity line out just like our ETF did. If we can see this, we could get a break above here. If we don't, we might have a a negative reversal on the RSI here, and it could roll back over. So it's a very tentative, but the medical equipment's one of the areas I like the most in this space. Pharmaceuticals was the strength, and now it's kind of waffling a little bit more. Its RSI is still higher, and it did hold 40, but if I was going to go against one of these, I would probably be looking more towards the medical equipment or the healthcare services. So hopefully that gives you a good idea on healthcare. That was the quickest one of all of them, but it's really not something I think is worth digging that deep into, because in the first ones we went through, there are just so many other opportunities. It is just nuts. So let's see how things start tomorrow. I'm going to get this up as early as I can tomorrow, and hopefully you can have some time to watch it before open. Have a great day. If you're watching this in segments, then I hope you have a great week, and I hope you're able to look at some of these different sectors and find some things that look great to your trading style.